I'm Andrew Hall, CEO of the Insurance Council of Australia. Thank you for joining us today on our ICA TV interview that we're having with Dr. Daniel Mulino. Dr. Mulino was elected as member for Fraser in the Australian Parliament at the 2019 federal election. He's also chair of the Standing Committee on Economics for the House of Representatives and has just delivered a report on the inquiry into the insurers' response to the 2022 major flood claims. Daniel is an economist by training with a PhD from Yale University. He lectured at Monash University in Victoria and worked as a public policy consultant at the World Bank and firms including McKinsey, Alpha Beta, Pottinger and the Nous Group. Before entering the Australian Federal Parliament, Daniel served as a Victorian member in the Victorian Parliament. He was Parliamentary Secretary to the Treasurer in Victoria between 2014 and 2018. Daniel, thanks for your time and thank you for joining us. We really appreciate it.
Well, thanks for having me on, Andrew.
I guess this is an opportunity for us to ask you questions. You've spent a lot of time now over the last 12 months asking insurers and speaking to insurers. I thought, just to kick it off, you are chair of the Economics Committee. You deal with a lot of financial services. Mm-hmm. What are your reflections on the general insurance sector by and large and the role it plays in the Australian economy?
So, look, taking a step back is a really interesting way to start it. The House Economics Committee deals with all of the key regulators, so the RBA, ASIC, APRA, ACCC. But as you say, we also deal with all of the key sectors of the financial services industry. So that includes banking, superannuation and insurance. And so for me, it reinforces constantly how important financial services are to people's everyday lives. So obviously with superannuation, it's all about people's dignity and retirement. With banking, it's about people's accumulation of assets over their life cycle and the efficient allocation of capital. And with general insurance, it's risk management across our economy. It's about helping individuals, households, and small businesses, often in their darkest hour. It's about providing a safety net to people. And so when general insurance functions well, it's a really critical part of providing people with protection. So that's a really important function in our society. And it's also worth reflecting, I think, that when insurance operates well, it's part of a broader risk management ecosystem where government also plays a part. So it's not just about thinking about general insurers, it's about thinking about the interface between what they do and what government at all three levels does.
And the inquiry, we saw a lot of the witness activity and the work you did around Parliament, but in fact the committee did a lot of travel around Australia and visited a lot of the communities that were affected by the 2022 floods. And indeed, the events at Cyclone Jasper at Christmas time in far north Queensland last year. What were your overriding impressions of those communities and the key themes and feedbacks you were hearing?
So, yeah, you're right. The work of our committee is often somewhat constrained to Canberra, Sydney, Melbourne, talking to the CEOs of regulators or the CEOs of big companies, insurers, banks or superannuation funds. We did, in this inquiry, start with some of the corporate and regulatory leaders, and that was really important to establish an evidence base. But unlike most of our inquiries, as you said, we then travelled out into communities. We held something like 14 days of public hearings in very heavily affected areas, right up and down the eastern seaboard. And that allowed us to firstly talk to individuals who were affected, talk to local government, a part of government that often doesn't have much of a voice in these kinds of inquiries. But on top of those public hearings, we also visited people at their homes. We visited schools that had been flooded and will never open again. So we saw firsthand what it actually looks like 2 years down the track for communities after they've endured these types of floods. And the final observation on this side of the inquiry is that we hold public hearings generally in which we hold 30 to 60 minute sessions with a stakeholder and ask them questions, and there's back and forth. Because there was so much interest in this inquiry, we had a special section at the end of each day of our public hearings where individuals from the community could come and provide 5 minutes of testimony, uninterrupted, telling their story, and that went on to the Hansard. That was something which we considered as part of our deliberations, and that was very powerful. As much as the data is really important, I think hearing those individual stories added a lot of nuance, it added a lot of light and shade to the stark stories that you can sometimes get from just looking at a graph or data.
Yeah. You worked, I think, for the then Assistant Treasurer a while ago when we had those terrible floods a decade ago in Queensland. You're no stranger, I think, in effect, to some of these events. Was there anything that stood out to you or surprised you from 2022?
Well, I suppose some things remain as issues. So the difficulty of insuring high-risk properties was an issue back then. It's an issue now, and we can talk about this in more detail, but opt-out was almost the pragmatic holding pattern response from 2011, and I think it worked well for a decade. It was interesting that one of the big policy reforms that came out of 2011 was standardising the definition of flood, and that was generally seen as a positive step by a range of stakeholders in this inquiry, but clearly we're now at a point where we're now considering standardising other terms. So there were some issues where there's been some continuity. One difference in this inquiry was that because I chaired public hearings in communities, I suppose I got to see more up close and personal, the impact on individuals. So when we travel to communities like Lismore, like Molong and Yagara, like Rochester and my own electorate, you get to see what it means for families to be out of their home for 12, 18 months, 24 months or more. And that's very confronting. You get to see the difficulty of on families and small businesses of disputes dragging on for very long periods.
Yeah, so I mean, stepping back then and looking at your report, you described the report as being the 3 Ps of flood insurance: policyholders, pooling and preparation. Maybe first explain why you categorised it in those 3 areas, and then we might move on to the recommendations and talk about those in more granular detail.
Well, as you alluded to at the introduction, I've worked for a few consulting firms, and consultants get taught to bracket things into groups of 3 because that's the way the human mind works. So the 3 Ps was partly just me trying to group it into 3s and using a bit of alliteration. Yeah. But I do think that covered off on some of the key themes. So look, policyholders, I think, for me stood out in that was really the key rationale for the whole inquiry, that there was a feeling in many communities that too many vulnerable policyholders had been left behind. So that was a real focus. And I think there are a number of areas in which we can improve the way that policyholders are treated. And I think that came out of the Deloitte's report, it came out of the ASIC report. And indeed, I think the industry itself is now working on a range of measures to deal with that. The pooling theme to me dealt with the fact that insurance, general insurance, but I think all forms of insurance are dealing with a range of challenges in relation to both the way in which granular data is undermining pooling, but also in relation to challenges around what risks are included and what risks aren't included in policies. So we can talk about that a bit more, but that came up in relation to issues like temporary accommodation or stumps. There's a real question for me around what kinds of risks is it appropriate for insurers to cover, and what kinds of risks is it appropriate to put onto individuals, households, small businesses. Now, of course, if you put some extra risks in the pool, that can have consequences for premiums, but I think that's a discussion that we should have. And then the preparation P really goes to the fact that we're also dealing, particularly with households and communities affected to very high risk, with longer term systemic issues. And that really comes down to the underlying risk. And so the Productivity Commission back in 2014, in a report released I think in 2015, found that 97% is spent on cleaning up and dealing with the aftermath, and only 3% on mitigation and preparation. We've improved that ratio since, but the preparation P was really getting at the fact that if we're going to deal with the risks in relation to very high risk exposed communities, I think we're going to have to think about how we reduce the underlying risk over coming decades. I didn't include a fourth letter, but if there was to be a fourth letter, it might be data, which is, I think, that both for the sake of industry and regulators and the community, I think we need to collect more systematic and more uniform data across the industry and report some of that.
So when we think about then the first P, policyholders, go back to that, there are a number of recommendations there around how the General Insurance Code of Practice can be strengthened. A bit of a technical question, I guess, but what's the balance between strengthening the code and encouraging the industry to focus on that, as opposed to the Insurance Contract Act and that sort of black letter law that governs insurance? We're unique in that sense that we've got that backstop of the Insurance Act, but then the operational and the handling and standards and the like start to fall within the code rather than in a contract.
Yeah, look, it's a complex area. One thing I'd say by way of broader context is that there is a frustration on the part of many, both policyholders, some of the peak consumer groups, and others, that the code is seen as not having sufficient teeth. That at the moment the code sets out a range of obligations that in some instances are somewhat aspirational, that if insurers breach them on multiple occasions, there are no consequences. Now, this goes back to a more fundamental regulatory point around what is the point of codes? Yeah. Codes, and this is something that Treasury observed in its evidence, codes aren't intended to be enforceable in the same way that legislation is. They're meant to set industry norms above and beyond obligations set out in legislation. And that's not just for general insurers, that's the case with banks and in many other parts of financial services. Having said that, I think that there is a desire among many stakeholders that some aspects of the obligations in the code be more enforceable than they currently are. So my personal view is that it's important to have a code. It's important that we understand that the code is not legislation, but that we need to think about whether or not there are certain breaches that need to involve more consequences than they currently do. So I think, again, just trying to think about it from the higher level, the code I think currently does have consequences in terms of AFCA decisions, obviously. There are certain very egregious or systemic breaches which can lead to significant payments to the community. And I think one of the things which we need to think about over the longer term is whether or not certain provisions need to be identified as enforceable, which was something which came out of the Hayne Royal Commission. We didn't recommend that on this occasion, and I don't think that's something which the independent committee recommended. To your point, there's been a long-standing discussion, I know, in relation to insurance contracts as to whether unfair terms should apply, and there's been a long-standing discussion around the fact that certain parts of insurance contracts would create too much uncertainty, for example, for unfair contract terms to go to the actual risk allocation part of the contract. I suppose my observation would simply be that I think making the code contractually enforceable and having it approved by ASIC are really just ways of trying to increase the degree to which insurers feel bound to comply with it. My sense is that making it contractually binding would be very similar to the banking code in that it wouldn't lead to a whole raft of legal cases. I think it's really just trying to increase the extent to which insurers feel that they need to comply with commitments if they're made in the code.
And so that contractually binding piece, is your thinking that it is the code is then referenced within the contract that the consumer has with the insurer, or does it start and finish with approval by ASIC and that endorsement from ASIC elevating its status in insurer operations?
And look, my sense is that it would operate in a similar way to the banking code, but that certainly the way I would interpret our recommendations is that it wouldn't go to, it would be focused on the operational parts of the code, and really saying that those parts of the code aren't enforceable in the same way that legislation is, but we're really just trying to think about ways in which the industry feels that it needs to take them more seriously than on some occasions it has.
Yeah. There's another element in those recommendations for policyholders where you are recommending that regulators track and publish data on claims handling, similar to how data is published now for our colleagues in life insurance. What would be the benefits of doing that sort of tracking and publishing of data, that level of transparency for the consumer?
So with this recommendation, I think about it in terms of different audiences. I don't expect that if ASIC starts to collect data on completion rates and IDR rates and cash settlement rates, that suddenly we're going to have policyholders all around the suburbs clicking on the ASIC website 5 times a day to compare insurers. I don't think that's what's going to happen. I think that firstly, the collecting of that data would improve the quality of the collection of the data by insurers themselves. What we found is that insurers were open in providing us with data on a range of fronts, but for example, the internal dispute resolution data and the cash settlement data, among other things, were reported to us at such dramatically varying rates that it appeared to us that insurers were measuring very different things. Now, in the case of IDR, we have RG 271, which gives guidance on what is an internal dispute. But in the case of the major insurers, there were differential rates of between 4 and 10 times different rates of IDR across different insurers. It appeared to me, at least, that they were just measuring different things. Now, I think if we go to the point of ASIC gathering data on IDR rates and then publishing it, that will force the whole ecosystem to collect data on a more standardised basis, and that will be a very useful thing. If you look at cash settlements, I think it's very similar. So one audience, in a sense, is the regulator, and I think reporting to the regulator forces more high quality data collection. And these are things that insurers would be collecting anyway. I think it's just going to improve the quality of that data. A second audience would be external stakeholders like the media or academics. And I think there's real value in external stakeholders who might want to have a look at that data to make observations about the performance of the industry itself or differential performance across firms. And we've seen this, I think, play out in relation to a range of sectors. So there's value there. And it may be that over time, comparing performance, for example, on cash settlement or completion rates by brands might be something that ASIC might have on a portal which some consumers use. So I think it'll be valuable on a range of fronts.
Yeah. So thinking about IDR then, internal dispute resolutions, the customer complaints, as you said, some of those, what we call long tail claims, the people that are still out of their homes after 12, 18 months after the event. What were some of the common issues that were delaying these claims to be settled or the buildings to be completed? What were the nature of those disputes that you came across?
Yeah, so there were, in some instances, obviously, there were lots of hydrology disputes. And so we made a series of recommendations around hydrology reports, around ensuring that there's higher quality hydrology reports. We also made some recommendations around possibly exploring mechanisms by which they could be more independently funded, either by industry or by industry and government.
And just explain your thinking behind that. What is the driver of that approach?
Yeah, so at the moment I think there was a perception that where hydrology reports are relied upon, they're pretty much always commissioned by the insurer. And at the very least, that for some stakeholders created a perception that they might be, in some instances, skewed towards the party that's commissioning them. Now, we didn't receive hard, firm evidence of that, but it's certainly a perception. And there are other areas of legal disputation where there are systems set up to provide for independently commissioned reports. So we thought that would be something worth exploring. There was also the idea of possibly having joint reports for multiple residences or businesses where that's appropriate, and subject to possibly having caveats for particular properties if there are particular circumstances. Now, having said all of that, my personal sense is that in future, hydrology disputes may not be the big issue because so many insurers now are requiring full cover. So I think it's worth exploring ways we can improve hydrology reports, but I think in 10 or 20 years, it may be that that is not as much of a cause of dispute as it has been in the past. Yeah. The other cause of dispute was often around wear and tear and maintenance. And here we often find quite complex situations where there are very detailed engineering reports, very complex cases of causation being disputed. And it's very frustrating for a household to have paid a premium for 30 years and then a natural disaster comes through and then they find themselves 12 or 18 months later having to read these technical reports disputing whether or not it was the natural disaster that caused the damage, or whether, in the case of stumps, for example, whether the stumps were just in pretty ordinary condition anyway.
I was going to ask you about stumps.
Yeah, nobody knew what they were, what the condition was. So, look, I think there are ways we can improve the way in which we think about those kinds of disputes. So I want to start with the proposition that I don't think it's the case that insurers should take on all pre-existing damage. That would lead to too much uncertainty, that would have too much of an effect on premiums. But there were a number of disputes that we saw that had lasted for 12, 18 months plus, where it just seems like there's got to be ways we can have a simpler system, and probably a system where insurers, frankly, lean in a bit more and take on a bit more risk. And my sense is that it wouldn't lead to much of an impost on premiums on average, because we're talking about very small numbers of cases. And then the third set of disputes I'd identify would be where there's a decision made in favour of the policyholder, but where it just turns out to be a very long-running process to actually then deliver on the commitment. So it might be that scopes of works bounce back and forth multiple times over many months, or it might be that there is difficulty in obtaining third-party contractors, or that there's many third-party contractors and it all gets very difficult to project manage. Now, in some of those instances, the insurer is dealing with a very difficult logistical challenge. There might be labour shortages, it might be that the whole region is subject to constraints, but there are some instances where quality control over scope of works, for example, would seem to be something which could be tightened up, and where, at least in some of these long-running cases, it could improve timeliness.
And what about cash settlements? You no doubt had cases where there was disputation around the cash settlement. What did the committee glean from that? And I guess in a flood situation, as opposed to bushfire where you see quite a lot of cash settlements given the cost of the rebuild and the total destruction, in these cases you've got houses that are still standing and a different process to be able to get them habitable again. So what did you observe in that whole process of cash settlement? So
the first observation I'd make is that the committee generally found, and certainly my personal view is that cash settlements work pretty well if it's the minor cash payments along the way, whether that be for households or for small businesses. So for me, the real focus is on the final cash settlement, where it's a large payment that's basically then putting all the remaining risk onto the household. So that's really the focal point for me. The second observation I would make is that I think we need to have a much better understanding of how frequent those final cash settlements are and where they're occurring and what the trend is. It wasn't obvious to us from the data that we were provided from the insurers, and this is really largely down to inconsistency in the data. So I think that for me would be a really important thing for regulators to have a better handle on. There were some concerning aspects of cash settlements. Firstly, I think, other than where somebody is a tradie, it just seems as though in many instances it's putting a lot of project management risk onto a family when it just isn't obvious that they would be better placed to manage all of that than an insurer. Yeah. Secondly, there were a number of instances, and I've seen some of these in my own electorate, where the final cash settlement offer is materially higher, often double or more the first cash settlement offer. And that really raises questions to me as to, well, what was going on with the first cash settlement offer? And again, I think there needs to be a bit more transparency around this. On the cash settlement fact sheet, there's a strong recommendation that people seek advice. I think sometimes people are seeking advice, but financial counselling and legal advice is often hard to come by. So for me, this is an area where I suspect there were some problematic outcomes for people. I think cash settlements are sometimes appropriate, but I do think we need more guardrails.
Moving on to pooling then, you referenced just before the fact that hydrologists come into play because people have opted out of flood cover, and that potentially moving forward there could be less of that given the availability of opt-out. What are your concerns then if you think about moving into the future? Homes that do have a high flood risk in this country, are we on a trajectory to see people with less insurance and I think a bigger protection gap? And are there ideas of the committee discussed or heard that government and the industry and others should be investigating?
Yeah, look, I think this is a huge policy conundrum that will be with governments for the next decade. And I think when I go back to the days when I was an advisor after 2011, we looked at a few models back then. Obviously, the Trowbridge inquiry report was handed down at that time, and that was a really important piece of work. I think it actually stands up very well, and I think much of the reasoning in that has been vindicated. If I was to look at the broader term trends that have arisen since 2011, at that time, I think a government adopted opt-out as a kind of pragmatic compromise, and I think it broadly worked for the decade following that. And opt-out was really a way of saying that we want households and small businesses in these high-risk areas to have some insurance, but actuarially accurately priced insurance that includes flood is not going to be affordable. So opt-out was the compromise, and that worked well, and that was a form of insurance that many households and small businesses in those communities took up. What I've observed over the last few years is that insurers seem to be backing away from that, and one of the major insurers backed away from it during the course of our inquiry and pretty much announced it during public hearings during our inquiry. Now, that to me is driven partly by risk appetite, partly by reputation risk management, where companies worry that even if they have excluded flood, that it leads to all sorts of complications after an event. But the bottom line is that we're now moving towards a situation where very few insurers are offering opt-out, and it's not clear that those who are currently offering it will continue to. So that could lead to a new market equilibrium where hundreds of thousands of homes don't have any insurance. So that's just not going to be socially acceptable, obviously. That then leads to a question of government probably has to step in some form. Now, I think a number of stakeholders, including the ICA, have rightly pointed to some overseas interventions which haven't worked well. There's a number of countries who have intervened in ways that have perverse incentives for further development, or in the case of California, I think, where there are caps which have perverse incentives. So rather than coming down on a particular model, we settled on a set of principles. So one of the principles was that if government is going to intervene, then it should really be trying to achieve a situation in which insurance for all perils is affordable. Having said that, for very high risk properties, you'd probably want there to be some price signals, even in that environment. We included a principle that you'd probably want to reduce cross-subsidisation as much as possible, because it does end up being distortionary. But essentially, if you believe that government should intervene, then it probably is going to have to involve some kind of either cross-subsidisation or some kind of subsidy. And then the question is, how does that subsidy, how is that subsidy channeled through? Is it directly through a direct subsidy to certain policyholders, or is it indirectly through some kind of reinsurance intervention?
And who would pay?
Yeah, and ultimately I think then it's either through taxpayers or through other policyholders, essentially. So look, we didn't get into all of that detail, but we did, the majority of the committee, there was a little bit of dissent on that particular set of findings. We did make the conclusion that some kind of intervention is going to be necessary. Now, the dissenting report from the opposition recommended, as an alternative to that, mandatory opt-out. And I think that's potentially an interesting option. It is a lighter touch option. Personally, my reservation on that front would be if an insurer really doesn't want to cover a particular high-risk property and they're forced to offer opt-out, they could easily just offer opt-out at a very high price that the person wouldn't accept. So I don't know whether that's going to fundamentally get you to where you need to get to. The only two other observations I'd make on this is that if we are going to go down the path of government intervention in some form, which I think will be necessary, I think mitigation needs to continue very strongly, both at the community level and at the property level. I think we need to do a better job of trying to identify property level interventions that make sense, and then having mechanisms by which insurers pass on premium savings immediately. But then obviously at the community level, we need to continue the work of the HIP, which I think has been very positive over the last couple of years. And the second observation I'd make is that we need to stop new developments. Now, this is something which I think probably 20 parliamentary reports have suggested over the last however long. I think we need to think of new mechanisms which the Commonwealth can implement. One of them would be property level data disclosure for newly zoned properties, which I think could be potentially undertaken through the HIP. But the other one, I think, is for government to think about working with the banks to limit new mortgages or new loans to developers for newly zoned land that is at 1 in 100-year risk or more.
So a lot of interesting points there. When we think about data then, and you've mentioned it a few times, how are you thinking about the impact of a much stronger data-led future with AI and all the rest, where we have the potential to lessen the effectiveness of pooling that insurance does? We're going to be very granular now on homes. Is there a role here for the industry as well? While examining what to do about the flood issue, we also need to think at the same time with government about what a data-led future looks like in this space and the impacts it will have on insurance premiums.
So I think this is affecting all insurance and not just general insurance. And if I think about health insurance, for example, where they've been grappling with this for a long time. In Australia, we deal with this through a range of mechanisms, but community rating is one way in which we've dealt with putting limits on the extent to which health insurers can price policies for individuals. And more recently, the government has started to go down the path of limiting the extent to which insurers can use the results of genetic testing. Now, how does this play out in general insurance, in particular for natural disaster pricing, well, I think it's actually going to be a real regulatory challenge. I don't think that the community rating approach is going to work here. I don't think that it's going to be sensible to say to insurers you can't use granular data. I think that horse is bolted, but also I think it would have a number of perverse outcomes. So I think we're going to have to think about it in different ways. I think that the granularity of pricing for households exposed to very high risks of natural disaster, in particular flood, because it does tend to hit the same households time and time again. I think, as we just talked about, I think that is going to necessitate government intervention at some point. I think very granular data for more medium risks, if you want to put it that way, could lead to very positive outcomes in terms of encouraging household level risk management. So in the case of bushfire, which we didn't look at, and I'm not an expert on it all, but it might be that through the bushfire app, we could see a lot of households undertaking very low cost, very high impact risk mitigation at the household level. In the case of flood, talking to households and small businesses in Lismore, for example, a lot of small businesses have come to the realisation that they want to stay where they are, they're at a high risk, but they can redesign their building with different flooring, with different placement of electrical equipment. They can basically get to the point where they can, if they do experience a bad flood, then clean themselves out and get ready to get back on track after a couple of weeks. So it might be that at the property level we can see granular risk pricing lead to better management of risk. At the property level in my electorate, for example, there's a lot of two-storey properties on the riverfront. It might be that some properties then rethink the way they use or make more resilient the lower level of their properties. So look, I think that there's an opportunity to use a lot of that data in constructive ways.
You touched on land use planning and future development and the need to work together with state governments and banks and insurers. If we think about the existing housing stock though, people that were impacted, did the committee hear from people involved with the buyback programs? I think the Commonwealth has invested at least $1 billion in, I think in total it's 1.5 billion with the states up in the Northern Rivers and in Brisbane. We're seeing a lot of homes getting bought now and removed from those dangerous areas. Did you get a feel for how that's going? There must be a lot we can be learning from all that as well.
Well, the broad evidence that we received on the resilience authorities, and as you say, there's something like 1.5 billion that's been spent in the Northern Rivers and Southeast Queensland. The broad evidence that we received is that both of those interventions were positive. But
they come with a lot of community anxiety as well, don't they? I mean, they have to be navigated very carefully with communities.
That's right. I mean, the other limitation of house buybacks is that they're very expensive. So I think ultimately, I think as we get more and more data, as the HIP expands, I think what we're going to be able to develop over time is a very holistic way of thinking about community risk. So we'll be able to get a better sense over time of where can we build levees, where can we build retardation basins, where can we manage that community level risk. Where that's not an option, realistically, I think then buybacks come into play. But then there's also house raisings. I mean, there's a whole range of options. And I think if at the government level we're going to be spending more over time, I think then we need to start developing holistic business cases which look at the full range of options and then pick the right option for the right area. And
I mean, the beauty of our federation, the question is which level of government is best to lead on this. You referenced your own electorate where flood mapping has just happened and people have learnt new information about the properties they've lived in for a long time. Do we need to empower local governments to do this better, do the data, do the mapping better? Which would be the case. Brisbane City Council would be the leader, I think, in this across the country. But is it state governments? Who is it in the beauty of our federation that's going to be able to drive this?
Well, I think there's a few different aspects to this. I think one is the the higher quality and more consistency in flood mapping and flood modelling and climate modelling now, because it's not just now modelling the flood risk of certain areas. I think there's going to be a growing expectation that we model that out to 2050 and 2100, which was part of the Melbourne water modelling that was released recently. But for me, the first question is, can we come up with a nationally consistent set of approaches for how flood modelling is undertaken and how climate modelling is undertaken? Secondly, if we want that undertaken to a high level, whether it be small LGAs or small water authorities, we're probably going to have to figure out a way to fund them where they don't have the internal resources. I suspect that will ultimately come down to state and federal governments jointly undertaking that. And the third issue is, how do we release all of this information? At the moment, it seems to be done in a somewhat haphazard way, frankly. I think we need to figure out a way to get that information out to the public. But in my own area, I've seen it happen in such a way that some communities find out that they're now 1 in 100-year flood risk through the Herald Sun. And we just need to figure out better ways to undertake that community consultation process.
And then in terms of how buildings are built, the National Construction Code obviously leads the standards in this country, and the government recently at the federal level moved to insert resilience as a key objective, which is important for that climate risk and durability for the weather conditions that homes face now and into the future. We have heard some calls to freeze any changes to the NCC for a decade. I mean, is that practical when you've seen the lived experience of what's happening on the ground?
Well, I think here we get to, as you allude to, a fundamental trade-off in that we need to make buildings in certain areas more resilient, but we are facing a housing affordability crisis across the country, and we need to increase supply. So, look, there's no easy answers on this one. I think that the calls to not change it for a decade are mirrored in people who want no regulatory change in a raft of areas, but that's probably a forlorn hope. I just fundamentally go back to the point that I think that we do need more housing stock. My personal view is, and this was something that's reflected in the findings of the committee, is that we can't deal with the housing supply issue by approving more developments in floodplains. I just think that's unfair on the young families, or any families, but if it's in an affordable area, it will often be young families moving into those areas. I just think that's a fundamentally unfair way to deal with it, and we're talking about moving people into areas that are 1 in 100, but that maybe 1 in 20-year risk in 30 years' time, the way that risks are changing. So I do think we need to think about more resilient buildings. It's just constantly dealing with trade-offs. And
one of our favourite topics to talk about within the industry is the amount of tax that we are collecting off premiums. You did make a recommendation about state taxes on insurance. Do you think it's realistic that they can be removed, or is there other things we should be thinking about in this space?
Well, tax reform at all levels of government is difficult. One person that I heard speaking about tax reform recently and the political economy of tax reform said that sometimes the way to make a problem that's really difficult easier is to make it bigger, which is counterintuitive. But I think the argument is, for example, with tax reform, that if you're going to deal with a particular tax that might be inefficient or distortionary, it might be that the only way you can deal with it is by dealing with a raft of changes at the same time that end up being revenue neutral, but that perhaps take away some inefficient taxes but increase some more efficient taxes. Because fundamentally, I think we have to start from the proposition that state governments need revenue to undertake all of the important services they're responsible for, health, education, justice and transport, and the list goes on. So look, it's not realistic obviously for state governments to just remove insurance taxes. They're too big. So I think it's only realistic if we think about those taxes as part of a broader suite of tax reforms in which some taxes come down, but some are going to have to replace those.
We've got your 86 recommendations. The industry's got the panel reviewing the code, about 104 recommendations there. What do you say to the industry about how do we move through this next period in terms of understanding the recommendations and working through them and with government and the like? What would you like to see? How would you like to see that play out?
So look, from my perspective, and this is, I suppose, me adding a bit of personal commentary and priority on top of the report. Look, my sense is that there are some recommendations which are, in relative terms, low-hanging fruit. So, for example, insurers appointing a consumer advocate who could play an internal role in giving a better understanding to senior management of where there are pressure points and then deploying internal resources to resolving those. That I don't think that would cost much, and indeed a lot of insurers have already started going down that path, and it could actually end up saving money in the long run, in that if you can resolve some of these cases faster, it'll end up leading to cheaper reconstructions and less temporary accommodation, for example. And obviously, from my point of view, the important point would be that it's a better outcome for the policyholder. But it's also, for me, ultimately going to make sense for the insurer. Another example that for me is low-hanging fruit is moving towards systems where there's single point of contact, better case management, better document handling. Now, again, I think most insurers, certainly in what they've said to me, is that they're already moving down that path, and it just makes sense in terms of their own internal efficiency. So a number of our recommendations pointed to the way in which the policyholder experience would be improved by having a person allocated to them as the person they can reach out to. That doesn't necessarily mean that every single thing that goes on behind the scenes involves that person. But again, there seems to me to be some low-hanging fruit there as well. Now, we recommended some code changes on both of those issues, but it seems to me that there's all sorts of things the industry could do even before the code changes. And again, there's probably low-hanging fruit for me around ways in which we can more systematically collect data in a standardised way across the industry. Now, we recommended legislated changes to give ASIC more power, but look, there's probably things that could be done even before all of that goes through, where ASIC and industry could probably work together to figure out ways to collect data in a more consistent way. So there are a few bits of low-hanging fruit. There are more complex changes, for example, around some of the pooling issues that we've flagged around stumps, around pre-existing damage, around temporary accommodation. And then, of course, there's all of the really complex issues around the very high-risk properties and communities. That's going to take years to figure out, I think.
It's November now. What is your sense of how the industry, governments, communities are prepared for this coming season? We know that this is in insurance talk, the cat season. What is your sense of how the industry is placed and how we're going?
Look, I think that my sense is, looking at where things stand compared to where they stood in 2011, that the industry is better placed, that regulators are better placed, that I think we're collecting better data. I think IT systems are stronger, but it's not a binary thing. It's not like we're ever going to be ready or not ready. I think it's obviously always a work in progress. So as this report suggested, I think there are things that industry needs to do to improve its claims handling.
And is there anyone we could be learning from? Is there anyone you'd point to that you think insurers probably could benefit from in terms of those improvements?
Or in terms of other industries?
Sectors, yeah.
Look, I think if you look right across financial services, there's probably all parts of financial services are probably moving forward in similar ways, but probably facing similar challenges. Look, my sense is probably that the people who work on a lot of these operational questions probably day to day look to other insurers and look to their peers to see what they're doing, but they probably look to other parts of financial services. I mean, I'm certainly aware that super funds and banks are constantly trying to figure out ways to deal with clients more seamlessly. They're trying to constantly figure out ways to handle disputes more rapidly. But if you look at the news, banks and super funds appear in the news because they're dealing with a lot of the same kinds of challenges. So, look, I wouldn't say that there's a particular part of the sector that stands out. I'd say that any organisation that is dealing with millions of customers benefits from scale, but also suffers from the challenge of not letting individual cases or individual disputes fall between the cracks or drag on. So I think probably everybody's going on the same journey.
Well, I think that's an important point to perhaps end on. Daniel Mulino, thank you very much for your time today and for all the work that you and the committee have done over the past 12 months. I'm sure you're looking forward to probably thinking about something other than general insurance for a little bit, but we wanted to say thank you for your openness and your feedback today. It's been very helpful.
No, thanks, Andrew. And here's hoping for everybody's sake that the cats this season are small.
Kittens.
Yes.
Yes, indeed. Thank you, Daniel.
Thank you. Thanks, Andrew.